Okay, I know this looks like an ordinary bounce, and we got Bitcoin back at 20,225, but I'm actually going to show you today why I think this bounce actually is different from all the other bounces. And if my theory is right, let's just say, humor me for a second, if my theory is right, then this could be the beginning of something massive for Bitcoin. In fact, so massive for Bitcoin that I actually think it could take Bitcoin over the previous highs. So that's what we're going to be talking about today. Also, we got Powell going live in a couple of minutes talking about crypto. So I am monitoring that for us over here. Here he goes. This Powell.
Hello to everybody. Ladies and gentlemen, bienvenue à Paris. Welcome to Paris and to the Banque de France, even if you are not exactly in our premises, which are quite close to the Louvre.
Okay, so I'm going to keep monitoring that. In fact, our team's going to keep monitoring that. We're going to cross over that when it's time for Powell to speak. We've got a lot to talk about. We've got Kwon and potentially an arrest warrant with Interpol. We've got some altcoins I want to talk about, and it's just going to be a big show. So I'm here in Singapore, wasn't going to do a show, doing an unscheduled show. Let's do it. Yo, I love this fam. I love this fam. Bunch of DJs here anytime of the day and night, scheduled to unscheduled. You guys are here to support me while I bring you crypto love and crypto wisdom. Now listen, guys, this is a completely unscheduled stream. I wasn't supposed to stream, but there was a Bitcoin breakout, and I think I know why Bitcoin is breaking out while there are so many currency wars. There's also Powell speaking live around tokenization in finance, and I think that's also going to be quite big. So we're here, we're going to do this together. I need you guys to do me a huge favor. Because this is not a scheduled stream, I need you guys to smash that like button. I need you to subscribe to the channel. And if you're not subscribed to the channel, then what I need you to do is I need you to hit that bell notification as well, because that will tell you when we're going live. And there's going to be a lot of unscheduled streams in the next couple of days. So let's do this, guys. Let's do this. There's so much to talk about. I guess, look, the team is watching this. They will tell us when Powell goes live. So we're not going to miss anything. You got nothing to worry about. Also, I know I've got you guys in the chat. So between the team and the chat, we'll get this one right. I want to talk about other things. I want to talk about more important things, and that's this over here. So, by the way, you can see I'm in Singapore. I don't have my regular streaming setup. I'm in a tiny room. If I tell you this room is tiny, in fact, on Twitter, I'll post a little video of what this room looks like right now. You will laugh your heads off. But here I am, and I'm doing it. I'm bringing you crypto love and crypto wisdom. All right, let's go. So let's look at Bitcoin, and let's look at this pump that we're getting in Bitcoin. So we were testing lows, but in fact, we weren't actually testing the lows. We were trading in that range. Remember, I told you there was that range, and I said every time Bitcoin goes to 18,800 or so, you should be buying. And in fact, I told you guys that you should have bought the range at the bottom of that range. And now we're back up at 20,263. The good thing is that if you look back at this, Bitcoin hasn't tested that bottom. Where, remember, I said to you, I think that was the bottom. That was the June bottom after the Luna unwind and the 3 Arrows Capital unwind. And I said, look, we had so many forced sellers, so many forced liquidations, that I think that was the bottom. And you know what? We haven't even come back to test that low yet at all, despite the fact that on the stock markets, we almost tested it on the NASDAQ. So that is the June low on the NASDAQ. And the NASDAQ has had a bloodbath in the last couple of days and almost tested that low. In fact, that low on the NASDAQ was about 11,055, and NASDAQ went down to 11,160. So you can pretty much say that the NASDAQ actually tested that low. So very encouraging to see that even though the NASDAQ was going down, Bitcoin held itself, 18,800. It wasn't going down, even though there was a bloodbath on the NASDAQ. And let me tell you, it has been an absolute bloodbath on the NASDAQ. This is what the NASDAQ looks like in the last month. Now, I know for crypto, it doesn't seem like a lot, but when you're talking about shares like Microsoft and Google and Apple and Meta going down 19%, 14%, 15%, and you consider that most of the pensions or most investors in the US and most ETFs in the US are indexed somehow towards the NASDAQ, you realize just how big this NASDAQ collapse has been. In fact, September has been a huge, bad month for the NASDAQ, and Bitcoin hasn't even come back to touch its lows. And I think I know why that's happening at the moment. In fact, if you look at Charlie Bilello's tweet, he says only 3% of the S&P 500 closed above their 50-day moving average. So this is a huge collapse in the NASDAQ, and the NASDAQ testing its June lows, and it will probably break them at some point, and hopefully Bitcoin will still hold the levels that Bitcoin's holding. I did see this tweet, which shows how the current bear market fares out relative to other bear markets. So if you compare where we are to where 1970 to 79 was, you can see 79 was brutal. 80 to 89, also quite brutal. 2000 to 2009, that was a big dot-com crash, brutal. And if you compare that to where we've been now, we haven't even started. So there is a chance that we haven't even started. But generally, when things get bad, you'll realize that a lot of people will say that it's going to get worse. And that's kind of where we find ourselves now. We find ourselves where everyone has resigned to the fact that it is bad out there. Everyone thinks it's going to be bad. Interest rates are going to continue to go up for a long time. Markets are going to continue to come down. And we're starting to feel that sense of panic. We're starting to feel like investors are absolutely panicking. And that's usually when we get some kind of relief bounce. I'm not going to say it's the end of the bear market, because I don't think it's the end of the bear market, but I do think that it is some kind of relief bounce. When you get the NASDAQ doing that in a month, or doing that, in fact, let's quickly measure what the NASDAQ did in the month of September, month to date. So that's the 30th of, that's the beginning of September. We're down about 10% in September. Now for the NASDAQ, that is huge. That's a massive number. And I don't know if you guys remember, but a while back I said to you, I think that the narrative is going to change. I said to you that I think that the narrative is going to shift from interest rates to the Dixie. In fact, that was about a month ago when I said to you guys, I tweeted this, and I also said it on the show. I said the Dixie just broke a previous high. This was when the Dixie was still at 105. I said a close above this level may mean a much stronger US dollar. Market's all about narratives. For the last 9 months, it was about inflation and interest rates. For the next couple of months, it's going to be the Dixie, and that's going to be the narrative. And that's exactly what's happening. You can see what the Dixie has done. The Dixie has done, it's staying in that parabola, which is very scary. But on the other hand, you can see that it actually may just wicked above this trend. So we want to see if it breaks through this trend. My feeling about the Dixie is that it is slightly overtraded at the moment. I think that this trade is overtraded. And to be honest, if this was an altcoin, then I wouldn't be buying this altcoin anymore. I would say, look, time to take profits. And I think it's time to take profits. People are also telling me, people are saying, what's happening with Powell? Guys, we are watching. Don't worry. We've got the whole team watching. As soon as Powell comes on, we're going to get a phone call. So you really have nothing to worry about. We're keeping you guys updated. So that's what's going on. The Dixie breaking this, it did get some resistance at this line over here. Let's watch and see if it starts to come down. What we are seeing, though, is we're seeing that right now the market is leveraged again. So you can see that here is the Bitcoin open interest, and you can see that the open interest, and that shows you guys the amount of leverage in the market, is that there is huge open interest in Bitcoin, and that we are pretty leveraged. But I did some digging, and remember when we did the Ethereum show, and at the end of the Ethereum show, this was the end of the Ethereum show, do you remember what I said? Something happened, and I said, guys, it's actually going to be the price is actually going to go down. And there was a reason why I said the price is going to go down. Well, listen to this.
Yeah, I think it's going to be a good day. Let's see.
Oh, wait, hold on. I'm getting some statistics here on GMX. Okay, hold on a second. So GMX, the total longs are double the total shorts. That's not good. That means that the longs would probably get liquidated. So remember that happened when we did the Ethereum show. Well, now, if I go to GMX and I look at the total shorts versus the total longs, you got the shorts about 50 to 60% higher than the total longs. So that means that right now, what could possibly happen is we have got a lot of leverage, and it seems that this leverage is actually now to the short side. So more people have been calling the short. Now, you know that when a lot of people call something short, what happens? Usually the price goes up. So if you take the Bitcoin chart and you say, okay, hold on a second, the majority of people are currently short. If this plays out like we think it's going to play out, this price goes up a little bit more, and then we start creating a huge short squeeze. So pay attention to that, because that may be the beginning of something much bigger. It may be the beginning of a run to 22, 23, maybe even 24,000. So keep your eyes very, very, very close to this ratio on GMX. You can see most people are short. Right now, we are seeing the beginning of a short squeeze, and I think that if the short squeeze does play out, then I think it's going to be, I think that could be the beginning of something. I do want to show you this. So, okay, we have elections. We do have some good news. And in the good news for the markets, one is the markets, the NASDAQ and that have already run a lot. They've come down a lot. And usually when they come down so fast, you need to have some kind of reversal. That's the first thing. Second thing is we actually have Biden and his administration actually watching the markets. So actually watching the markets, and they're saying, look, we acknowledge that there is volatility. Now, generally, I wouldn't pay attention to this, but 48 days before, 45 days before the midterm elections, I do pay attention to when the Biden administration say they're monitoring market volatility. Because even if they create a fake pump, Biden is not going to let people go into the elections hungry, unemployed, starving, and making losses on their investments. And I think that 40 days to go, 45 days to go before the midterm elections, that's probably a good time to start getting yourself, to start positioning yourself for the election. Also, September is known to be a brutal month for markets. We said that in the beginning of September. We said all you need to do is you need to survive September, right? October is the opposite. So they actually call October the bear market killer or the bear market breaker. And if we look at the last couple of bear markets, in fact, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. There are 18 bear markets. And of those bear markets, 1, 2, 3, 4, 5, 6 of them have ended in October. So I'm not saying that this bear market could be over, but worth paying attention that usually September is a really bad month, and October is usually a good month for market. It usually breaks markets. Also, we've got a lot of Fed personnel talking this week, and one of them, Evans, says he's getting a little nervous about going too fast with rate hikes. So that's like dovish talk from the Fed, and that's not something that we've been accustomed to from the Fed. So dovish talk from the Fed coming out there says at some point it'll be appropriate to slow the pace of rate increases and hold rate for a while just to assess the impact on the economy. And I think that that's probably a smart thing to do, because it takes time for the effect of the rate hikes to actually flow into the economy. And I think I think them saying that, let's keep raising rates, but then at some point we're going to have to stop raising rates, and we're going to have to see what the effect is on the economy, and then make a decision. All right, so people are still asking. Don't worry, Powell's not speaking yet. Some other guy speaking. I don't know who he is. Here he is.
Has been conducting since 2020 9 experiments with a wide range.
We'll let you know as soon as Powell's on. But before that, I do want to show you what I think is going on with Bitcoin and why all of a sudden we've had a pump. It doesn't really make, what caused the Bitcoin pump? It doesn't really make sense that there's a Bitcoin pump. Markets have been coming down. There's not any good news in sight. In fact, if you look at the NASDAQ, even though we had a slight bounce in NASDAQ, less than 1%, you had Bitcoin rocketing today. So what is it? What is it that made Bitcoin rocket today? And I think it's a realization that I had this morning, and I think that realization a lot of people are starting to have at the moment. So let's go through the theory, and then you guys can decide whether you want to buy this theory and invest behind it or not. And the theory starts off with this thing around narratives. And I keep saying to you that crypto is actually all about narratives. And remember, we had the interest rate narrative before, and I kept saying to you it's all about interest rates and inflation, and the higher inflation will make higher interest rates. Well, that narrative is now gone. And about a month ago, in fact, just over a month ago, on the 23rd of August, I tweeted and I said, the new narrative is actually going to be the Dixie. And since then, the narrative has been the Dixie. And in fact, that is what's happened to the Dixie over there, as you can see. And at the same time, while this has happened to the Dixie, you've seen the dollar destroy a whole lot of other currencies. So I mean, you saw the Great Britain pound, and in fact, let's just take a look at 2022. So if we take the beginning of 2022 and we go all the way down to where we are today, the pound was at one stage down 25% against the dollar. And the pound's not the only one that's getting killed against the dollar. In fact, you've got the euro against the dollar. And if we go back to January and we look at how badly the euro has been destroyed against the dollar since January, you've got the euro also down 16% towards against the dollar. And these are levels that these currencies, and these are first world currencies, haven't seen for 20, 30, and 40 years. So as the Dixie, the dollar index, which is actually measures the strength of the dollar against other currencies, goes up and people flock to US dollars, all the major currencies and all the minor currencies around the world have been collapsing. And it's even currencies like the Japanese yen. The Japanese yen is known for its stability. In fact, in Japan, there's no interest rates. There are just simply no interest rates. That is also devalued 20% against the dollar. Now, these are major currencies. And with all these currencies, what we've seen that there's been huge interventions by the central banks to try and support these currencies. In Japan, we've had buying of the yen on the open market or selling of US treasuries on the open market, which they haven't done in many years. In the UK, we also had interventions. They came out yesterday with this huge announcement, or what we thought was going to be a huge announcement. And actually, all they said in this huge announcement is that the role of monetary policy is to ensure that demand does not get ahead of supply, blah, blah, blah. And all they said is they will do whatever it takes to return inflation to its target of 2%. And now what we're expecting is that the UK will raise interest rates by 2% before November. So that's another one of the interventions that happened. So you've had China intervene as well. China has intervened so much that it's actually now come out with statements saying that regulators asked to avoid trading activities that cause big fluctuations in the security market. Not only that, they've actually gone into the security markets and are buying stocks. They're buying stocks to stabilize the market. Okay, so all these banks, major banks in first world countries, have actually started to intervene. That's how bad the strength is of the US dollar. So, in fact, when the British pound collapsed the other day, just to give perspective on how bad this collapse is, this collapse was as bad as the period or the number of days where George Soros attacked the British pound and almost destroyed the British pound. So Alex Kruger says last night's Great Britain pound flash crash was almost as large as the infamous Soros-driven Black Wednesday of 1992. It went down 4.8% then, and it went down 4.3% now. So that's where we're at. If you want to know what caused the British pound to collapse, well, you can go watch Miles' show, which you did earlier, or you can just read a couple of articles. Essentially, what the UK did was they passed tax cuts to try and stimulate the economy, and with those tax cuts, they were concerned that they wouldn't be able to repay their debt and they wouldn't be able to hold the stability of their currency. And that's what caused it. But it's not only those currencies. In fact, every currency has, well, not every, but most currencies in the world have depreciated against the dollar. If you take the year to date and you look at all the major currencies in the world, even big currencies, South Korean won, Swedish krona, Japanese yen, British pound, all of those have devalued by 20%, 19% against the US dollar. And what you're looking at here is mainly first world currencies. But what about third world currencies? What about the Sri Lankan currency? What about the Indian currency? What about the Brazilian currency? The Turkish currency? Those, if you think that these currencies have collapsed against the dollar, well, can you imagine what it's like for the emerging markets? And this is where my theory comes in. This is where my whole theory comes in. We're in a period now where the dollar is strengthening and the dollar is showing no sign of reprieve as people run to the dollar to try and save their money, right? So people are now running to the dollar. At the same time, what's happening is all the other currencies are starting to weaken. And because the dollar is getting so expensive, because the dollar is getting so strong, it means that most countries that have a lot of debt, in fact, and most countries do have a lot of debt, and their debt is usually denominated in US dollars, simply won't be able to pay back their debt. So if you think about a country, say, for example, Greece or Argentina or Turkey, who has debt, and their debt is denominated in US dollars, when their currency weakens relative to the US dollar, they need to take a whole lot more of their currency to repay that original loan. And most countries simply cannot afford to repay the loan. And what that's going to cause is it's going to cause a spiral in the currencies. So as the dollar gets stronger, it's going to cause a spiral and a collapse in all the other currencies. And so if you think that these collapses that I showed you are bad, can you imagine what happens when some countries cannot repay their debt? In fact, we saw it with Greece, and I think we saw it with Argentina a while back, what happens when they default on their debt. And now, because the dollar is so strong, and most debt is actually dollar denominated, there's a big chance that most of these countries won't be able to pay it back, and their currencies will get destroyed completely. So now put yourself in a position of someone who's living in these countries. And it's happened to me before when I was living, or when I am living in South Africa, but it happened to me before earlier in my life when I was in South Africa. And what happened was the currency collapsed. And when the currency collapses, the problem is that you don't know where to put your money. So when your currency collapses, usually what you can do is you can run to dollars. The problem is with the dollar that trade is overcrowded. In fact, not only is it overcrowded and you got the dollar index at highs and very scary to buy into dollar index, but the problem is that usually in a lot of these countries, you actually can't even get your hands onto dollars, which means that you'll end up paying a black market or a street premium to actually buy dollars. And that premium can go up to 100%. In fact, in Zimbabwe, I remember that the guys had to pay over 100% to buy dollars. So there was a quoted rate and you had to pay double that rate. So what do people do? So what do people do in times like this? People who live in these countries that can't repay their debt. Well, they go and buy dollar-denominated assets. What are those dollar-denominated assets? Usually property. If you can buy property and property remains dollar-denominated, that's a good place to store your wealth. So if you see that your currency is going to collapse, the first thing that you do, go out and buy property, because you know that a home is a home is a home. And for as long as that there are people living there, there will be demand for the home and it's bricks and mortar. You can buy gold. You can buy silver. But if you bought gold and silver, they're illiquid and you can't transport them. You could buy the dollar, but the dollar, as I've showed you, is a very, very, very crowded trade. And so this is what I think is going to happen. I think that people are going to look at this and they're going to say, look, if I'm living in Britain and my currency is devaluing, I should put my money into Bitcoin. Because not only if I want to leave, like the Ukrainians or the Africans, if not only because I want to leave, I can just take the money with me on a USB port or on a hard drive, on a ledger or a Trezor, but I'm buying something that's dollar denominated. And so I tested this earlier, and I want to show you guys a chart. This here is, let's just take a date. So we'll take a date. The date is the 20th of, let's take the date of the 19th of September. And let's go to the US dollar chart from the 19th of September, and let's go to the 4-hour chart just to be fair. And that is the 19th of September. And here it is. If I take the 19th of September to where we are right now, Bitcoin has gone up 10.41% relative to the US dollar, right? Cool. Let's take that same chart on the Great Britain pound, on the British pound. And let's take the 19th of September, and let's take a chart to where we are now. And you can see that that Bitcoin has gone up 17% to the British pound. You see that? And so what I'm trying to say to you is, we are watching the price of Bitcoin relative to US dollars, which is probably a mistake. We should be watching it relative to all the other currencies in the world that are collapsing. And what people are going to start noticing is that they need to get out of their assets, and they can get into US dollars, they can get into property, they can get into gold and silver, but there's actually a very, very, very good viable alternative in Bitcoin. And I think that that's what's going to drive the next generation of Bitcoin adoption. In the last, hold on, people are saying speech. Let's just have a look here. I don't see it. Let's just have a look.
Of partners, by working on interoperability.
Nothing yet. The last cycle was driven by inflation, and Bitcoin was tested as an inflation hedge. That's what happened. This cycle is actually different. This is a cycle where Bitcoin is going to prove itself against currency devaluation against the US dollar. And because Bitcoin is primarily priced against the US dollar, then it may be a great trade for people who want to hedge themselves around currency devaluation. And the last thing you got to remember about these things is when currencies of third world market economies collapse, of emerging markets collapse, usually people want to flee the country. You saw it vaguely. You saw a small bit of it in Ukraine where people wanted to leave. And the last thing that you want to leave with is US dollar notes or the currency that that country holds. And so I think that we're about to enter a new cycle with Bitcoin. The cycle will be around all currencies devaluing against the US dollar and a very, very, very crowded trade in the US dollar. And so people may look for another alternative to invest in, one that hasn't run parabolically, one whose chart doesn't look like this. And I mean, you wouldn't buy that, right? But what about this? What about a chart that has done that? In fact, let's go just to a bigger. What about a chart that's done that? Maybe that is something to buy. Maybe that is something to buy. And so I think that whilst this trade is overtraded, this trade is still a good trade. And what's even a better trade is when you take it against these currencies that are collapsing. As I said, from the 19th of September, Bitcoin's gone up 16.52% against the pound. Let's take the euro, just to show you guys the same example. Let's take a Bitcoin euro trade, a BTCER. I know you guys are laughing, but if you saw my setup here, if I touch anything, a towel's going to fall onto my head. Okay, let's go to September 19th, where we were earlier. Yeah, there it is. And we go up there. You see Bitcoin's up 14.26% against the euro. And if we take the Japanese yen, so let's take the JPY. So let's take BTC JPY. Now, the Japanese one's a little bit more stable because remember, their government intervened. But even the Japanese yen is Bitcoin relative to Japanese yen 12%. And so what I'm trying to show you is because Bitcoin is priced in dollars, it may be an amazing hedge when the dollar is destroying other currencies, and in particular, when the dollar is an overcrowded trade and has already gone parabolic. And so for me, that may actually be the beginning of the next cycle. One was the inflation hedge, and now it's against the collapse of currencies against the US dollar, and the US dollar is too overtraded. Let me know what you think. Let me know what you think. I think that that's what's going to happen. Look, time will tell. Time will tell. Time will tell. But let me know what you think. Maybe that's why we have this pump, which is now 20,221. Let's quickly check in on Powell. Powell is not speaking yet, is he? Let's have a look. Don't see him speaking yet. No, I don't see him speaking yet. Let's talk about Kwon. I'm supposed to meet him. I came here to Singapore, and the last correspondence that I had with him is we were going to meet here in Singapore. But now I'm actually too scared to telegram him because I don't know who's got his phone and I don't know where the hell he is. That's the truth of it. You've probably all seen this, but probably worth mentioning that there was news that Interpol issued a red notice for Kwon. So that was how this all started. A red notice is effectively a notice by Interpol that basically says that he's wanted. And it says, red notices are issued for fugitives wanted either for prosecution to serve a sentence. A red notice is a request to law enforcement worldwide to locate and provisionally arrest a person pending extradition, surrender, or similar legal action. So this allows you to search all people that have a red notice against them. So I did a search for Kwon. I didn't want to put in nationality or anything else. Let's just see if there is actually a red notice on his name. No red notices. So I don't know if there is or isn't a red notice. There is a rumor that there is a red notice. I do know that he says that he's cooperating with law enforcement. He says we're in the process of defending ourselves in multiple jurisdictions, and we've held ourselves to a very high bar of integrity and look forward to clarifying the truth over the next few months. He also was tweeting today like nothing's wrong. He said, I mean, Trader SZ said, Stablecoin, where are you hiding, fam? It's okay, you can DM. He says, I'm writing code in my living room. How about you? He says, for something that has notice in it, it sure gives no notice. Try to search, found nothing here. So he's still tweeting. He's still tweeting like nothing's wrong. But at the same time, and I don't know how true this is, Korean prosecutors allege that Do Kwon tried cashing out over 3,313 Bitcoin through KuCoin and OKX after an arrest warrant was issued for his arrest. They allege that the funds came from the LFG reserves and they were put directly into an exchange account. So, I mean, I don't know. I don't actually know what the story is here. Let's keep following this. To be honest, even though there's no red notice, it does feel like the net is really, really tightening on him. And if I think about it, I don't actually think that Do Kwon did anything wrong. I mean, I don't think he was fraudulent. I think they may get him on like issuing a illegal security or unregistered security in an ICO or something like that. But the truth is, I think it sets a very bad precedent. And the precedent is, and I'm saying as long as he didn't commit fraud, I think the precedent is that if you innovate and something fails and something collapses, then there is a chance that you'll go to jail. And that's not something that you want. That's not something that you want. People are asking, where's Powell's speech? Guys, we were watching. Here it is. I mean, this is the live stream of where it's going to happen.
For possible digital euro in 2023, and this will lay down the principles for the digital euro.
So they're talking about the digital euro.
Will then have the opportunity to debate and amend our proposal.
So let's look at one or two other things that are happening in the market. I did see some other great news coming out of the market. The first thing is, remember I said to you that when Ethereum goes into proof of stake, a lot of people, and particularly institutions, are going to start locking up their Ethereum in the ETH contract, because you're now starting to earn quite a bit of yield. And so what we're seeing is we're now seeing that there's over 14 million Ethereum locked in the Ethereum 2.0 deposit contract. 14 million ETH now securing the network in the proof of stake. Also, I saw that Voyager was brought by FTX. They paid 1.4 billion, or I don't know if it was exactly 1.4 billion, because they said something like, in fact, let me show it to you, that they bought 1.4 billion worth of assets. So FTX's US bid is valued at approximately 1.422 billion. The fair market value of Voyager's cryptocurrency assets to be determined, at which current market prices is 1.3 billion. So it seems like they paid 111 million plus the value of the actual assets. That's more or less what's been done here. So that also happened today. Cosmos, they having their DevCon, so to speak, or their event, and they've published a white paper for Cosmos Atom 2.0. Now, this could get quite interesting, because remember, we love the Cosmos technology, but we don't like the Cosmos chain. That's the problem. We love the technology, we don't like the chain. Hopefully, the chain. Let's see, Powell. People, let's see what Powell's saying. Guys, there's nothing about Powell here. He's not talking yet. Trust me, I've got the whole team on standby here.
Rules and regulations are essential and must be tailor-made to meet this fast-evolving and exciting area. Thank you.
Okay, I think he may come on now.
Thank you. Thank you very much, Mayred. As you speak wonderful French, merci beaucoup. And if you allow me 2 words of European pride, Europe is seen as complex, and it is indeed in architecture, but it's very good to see how we can deliver on regulation. And second, Europe is not seen as especially innovative, but it's good to see that at least on CBDCs, and we'll come back to it, we are possibly on the front line. Thank you very much again.
Nothing to be proud of.
I now turn to our first roundtable about how should central banks address financial stability challenges related to decentralized finance. I don't need a long introduction. We are all aware that there was, for years, this challenge of accelerated technological disruption. And there is, in the more recent past, the additional challenge of monetary normalization. And we saw that the change of monetary policy has exposed weaknesses in the crypto asset ecosystem. We are lucky enough to have an outstanding panel to address this difficult question. And may I welcome online 3 of our participants. First, you see probably, I see Christine Lagarde already on screen, and we will see probably Jay Powell in 1 minute. They are the 2 leading.
I thought he was going to arrive in person. I really did.
So, bonjour. Good morning, Jay, because it's very early for you. Welcome to both of you. And we also have online a third central banker from Asia, Ravi Menon, Managing Director of the Monetary Authority of Singapore, and by the way, a very innovative central banker. Ravi, good evening for you in Singapore. And last but not least, but Augustin, I already welcome you, the General Manager of the BIS, who is, so to say, the central banker of central bankers, if you accept this image.
He's the epitome of everything we're trying to destroy.
About the way we will proceed. We have about 1 hour. First, we will try to look briefly at the global view on financial stability and decentralized finance. It will be introduced by Augustin Carstens, and then I will ask Jay, Ravi, and possibly Christine if they want to react on this first part. And then we will have a second part, which will be the longer one, on the responses of central banks, be it on innovation and or regulation. And Commissioner McGuinness and myself mentioned these two important pillars. And it will start with Christine and then Jay presenting the European and then the American view on the issue. Augustin, if you agree, let us give in 5 minutes the global view on financial stability and decentralized finance. And we all know how accurate you can be on such a sensitive issue.
Thank you very much. Thank you for having me here. It's a real pleasure to be in this grand event prepared by the Banque de France and in this magnificent fora.
I think he came for the lunch.
This is a very timely
discussion. He just came for the food.
Of course, we have been facing some circumstances recently that has put financial stability issues at the top of our mind. And in addition, we have seen very important developments in the field of DeFi. And as you said, we just witnessed a few months ago what you called the crypto winter. The financial stability issues, of course, are very important, and we have to assess the impact of DeFi into financial stability. Let me start very briefly without going on too long. We started with crypto assets, cryptocurrencies, Bitcoin, generally speaking. Problem there, major volatility, instability, lack of stable pricing. Next iteration was stable coins, which try to address the issue of instability of cryptocurrencies. And then based on using crypto stable coins, the idea has been to use different decentralized protocols and consensus mechanisms plus cryptography to further the application of digital assets to financial transactions. Therefore, DeFi has been created. I have to say it has been a quite unruly developments. It has developed in a very, I would say, laissez-faire way. And and one of the big problems that DeFi has, as we know it today, is that it's basically the applications of some cryptocurrencies with some other financial transactions that are self-referential. They really are not tied to real life transactions or need. I mean, they facilitate borrowing, lending, and trading, but it's mostly only cryptocurrencies. And it is based on, so DeFi depends and exposes intermediaries to the traditional risks that traditional financial intermediation establishes, which is liquidity risk, counterparty risk, leverage, and so on and so forth. But they don't have the infrastructure to deal with that. Basically, the way they have dealt with is by collateralized arrangements. And that's why stable coins is the grease on the wheels in DeFi. But oftentimes, the collateralization is not effective. The governance of many of these DeFi transactions are not well established. And they depend to a large extent on exchange houses that do too many things at the same time without appropriate segregation of activities, accountability, and appropriate governance. This leads me to, I would say, the punchline of this initial intervention, and that is that DeFi has today many structural problems that in a way, what we have seen today was not hard to predict. I mean, it was, and we at the BIS in different documents established there are intrinsic weaknesses into the system that haven't been taken sufficiently, and therefore it's not surprising that we have seen some stability issues in that sector. This has been compounded by the movement of interest rates, but I won't say that the movements in interest rates has been an additional element, not a key element of the problems we're seeing in DeFi today. Now, that doesn't mean that the technology that is behind DeFi is not useful, that the ideas are not challenging, and challenging more in an intellectual way, that we need to think about it and that we should find ways to make good use of them. But what I see is that the development of DeFi is going in one direction, and what we all would like to see from a financial stability is going in another. Therefore, we need to close that gap. We need to work more together with the industry. We probably, I would say, to some extent, we should go slower because we're in a hurry. The problem when you go in a hurry without much reflection is that this leads to accidents, and this is exactly what we're seeing. So the financial stability issues, precise financial stability issues that concern me the most are the contact points between the DeFi world that is out there with the traditional systems. A lot of that takes place through the exchange houses, the ramping up and ramping down of the system, and some leverage or some lending transactions where it is not very clear what is the collateral behind it. I think that we need to address them. I need to address them, but so far I think it is contained. I would say that the huge challenge, and I finish with this, the huge challenge that we face is that DeFi and the crypto world is global and is borderless, and therefore it requires huge amounts of coordination to bring this into an adequate regulatory perimeter that promises safety but also allows for innovation. Thank you.
Thank you very much. It's a very stimulating introduction, I must say.
I mean, it wasn't bad. His comments weren't that negative.
And perhaps also to come back to this issue of monetary normalization. Your image or your feeling was perhaps that these are more structural forces which are playing, and that monetary normalization only played a minor role. I oversimplify in the recent problems of the crypto world. But Jay, if you are ready to start,
NASDAQ is up 1.4%.
And thank you again for being with us in Paris. In Paris, you cherish, I should stress it again.
Yes, and I'm sorry not to be able to join you, as you know, in person there today. So I would just begin by thanking you for inviting me to take part, and also by agreeing with with the take that Augustin articulated. To begin with your last question, I do think that the monetary policy normalization that we're seeing all over the world, all it did was simply reveal what we've long pointed out as significant structural issues in the DeFi ecosystem and conflict of interest. And all of those things have been revealed, in effect, as the tide has gone out. So I don't think that's a particularly important part of the question here. Really, the question is that within the DeFi ecosystem, there are these very significant structural issues around transparency, lack of transparency, and I think Augustin did a nice job talking about them. So the good news, I suppose, is that the interaction between, from a financial stability standpoint, the interaction between the DeFi ecosystem and the traditional banking system and traditional financial system is not that large at this point. So we were able to witness the DeFi winter, but it didn't have significant effects on the banking system and broader financial stability. And that's a good thing. And I think it demonstrates the weaknesses and the work that needs to be done around regulation carefully and thoughtfully, and gives us a little bit of time. That situation will not persist indefinitely. Ultimately, that's not a stable equilibrium, and we need to be very careful about, and I guess we'll get to this a little later, but we need to be very careful about how crypto activities are taken within the regulatory perimeter. In any case, wherever they take place, as Augustin pointed out, there's a real need for more appropriate regulation so that as DeFi expands and starts to touch more and more retail customers and that sort of thing, so that appropriate regulation is in place.
What, that's it?
Come back to regulation in our second part. Ravi, can I ask you a brief reaction also on this financial stability issue?
Yes, well, thank you, Francois, and thanks for the invitation to participate in this, and greetings to my colleagues, Augustin, Christine, Jay, good to see you. I generally agree with what Augustin and Jay have said. Let me add a couple of nuances. I would say it will be useful to distinguish the various components of what we call the crypto ecosystem. And I think the kinds of risks each of them pose and the kinds of benefits each of them pose and what they mean for financial stability would be quite different. So if you look at, say, tokenized assets, for instance, there are many banks experimenting with this. Basically, you express the ownership rights over an asset as a digital token, and cash and bonds, real assets, intangibles, carbon credits have all been tokenized. These in and of itself, I think, pose lesser risk, but they're not the predominant part of the ecosystem, unfortunately, although I think that's where the real potential lies. Then you have cryptocurrencies, for which I don't see any redeeming value, because they're meant to be used as medium of exchange within the distributed ledger, but we have all seen how they've taken a life of their own Outside and are posing a range of risks, some of which Augustin have spoken about, ranging from consumer protection, volatility in value, money laundering risks, and even financial stability risks pushed to the extreme.
Wow, this guy's come out the blocks aggressive.
And the speculation in these currencies has led to price changes that are nothing to do with the underlying economic value. And I think with the current monetary policy normalization process and tightening, it is, as Jay said, they're going to expose the excessive exuberance that has been attached to these cryptocurrencies. And I think they're going to be affected badly. In fact, all of us on this panel, I think in our own ways, have been saying this, the risks involved in investing in cryptocurrencies. But who listens to central bankers, right? And I'm afraid it's the time for reckoning has come. I'm a little bit more
the time for reckoning has come.
Positive about stable coins if they're done well. Basically, these are digital tokens whose value is pegged to another asset. They can have a good potential as a medium of exchange because they're digital cash, they're programmable, can be put on the ledger, provided
he's pitching a CBDC
value is fully backed by reserve assets. So the focus of regulation is quite different in stablecoins. If we can crack that problem through an appropriate regulatory regime, I see more promise for stablecoins, and almost by definition, they should, reflect the demand for underlying fiat currencies to which they're pegged. And so the impact of interest rates and all that will be really reflecting the underlying assets. So I think we need to make distinctions across the three. And DeFi is a totally different animal. All these things that we discussed in the crypto world can operate alongside the traditional financial system. In fact, many banks and traditional players are involved in these innovations. DeFi is a totally different thing. And I fully agree with Augustin. There is a lot of stuff that's unknown. I would just say the central problem is that even if you can address the other risks, the big risk is where are you going to apply the regulation to? Because all our regulatory approaches are based on applying regulations to legal entities. In a decentralized world, you can't do that to an algorithm.
At least he
pinning
knows
that governance and risk management responsibility on the players that can make a difference in the DeFi world is exceedingly difficult. And that's something, if we can overcome, I can see some promise in DeFi. Otherwise, this could be a game stopper. But I want to say that you don't have to go as far as DeFi. Crypto assets and digital assets have a role to play alongside traditional finance. Some of them are working, some of them not going to work. And I think the current normalization phase in monetary policy is going to expose which are the ones that are promising and which are the ones that are purely speculative. Thanks.
I mean, he was aggressive. He came out of the blocks fully aggressive.
I'm sure the distinction you made between different animals will be useful when we will discuss more precisely regulation, as Jay mentioned. By the way, you use the word cryptocurrencies sometime, and usually we central bankers don't like that much the expression cryptocurrencies, because these are not currencies, these are crypto assets. But I'm sure we agree. Christine, do you want at this stage to intervene and react, or do you prefer to focus on central bank response in the second part? Please, you are very welcome. Bonjour.
Yeah. Thank you so much. Bonjour, François, and thank you so much for having us. And I think it's very fitting, actually, that we discuss this enigmatic phenomenon that took the world in such a stormy way, right in the middle of the museum in the world that keeps probably the most enigmatic painting, Mona Lisa. So thank you for having us in the Louvre. It's just perfect. So just 3 points that I wanted to share with you, which I keep thinking of in relation to crypto assets in general and the impact it has had. First of all, the evolution has been stormy. It went from this sort of cultural hype pushed by libertarians, promoted by Satoshi Nakamoto in his wisdom and total anonymity, to being this tool that is now accepted by the PayPal, Visa, and MasterCard of this world, and which has been abused by, whether it was Terra or Luna, but certainly Mr. Kwon, who is on the run, is the other side of that enigmatic coin, which warrants the regulation that has been advocated by both Jay and Ravi. Second, where evolution has been critically important, is this search for yield, which has clearly encouraged and accelerated the process at times when across the world we were in the lower bound and where interests to be earned were limited. And third, the world was caught by surprise. And from these regular statements that we all made that, oh, of course it was growing, but it wasn't systemic. Well, we are now at a stage where, between 10 and 15% of Europeans and Americans actually have invested in cryptos in 21.
At least they acknowledge that.
Where clearly regulators, consumer protection agencies, supervisors are now really attentive to developments. So those are three interesting aspects: this cultural evolution, the search for yield, and the world caught by surprise that I associate with the development of cryptos, that I will go into further details in the second part of this session, François. Thank you.
It's amazing that they acknowledge. It's amazing that they acknowledge that 15% of people actually own it.
Echo. I wonder if each of you can be on mute when you don't speak, but we could hear quite well. So we come to the second part about the responses by central banks to this landscape you presented to us, Augustin. Obviously, it calls into question an almost philosophical point, the relation along history between public and private money. And as all of you have said, it's a question of combining regulation and or innovation in our responses. So as I said, I suggest that our two prominent central bankers across the Atlantic, first Christine and then Jay, focus on their view on the topic, My understanding, and I say it with a smile, that Christine, you intend to focus perhaps a bit more on innovation and CBDC, and Jay, you intend perhaps to focus a bit more on regulation. Perhaps people would have expected the US central banker to focus on innovation and the European one to focus on regulation, but at least it shows you that we are all on the same page of combining both. And Christine, if you agree, you start.
Okay, well, thank you so much, Francois. And very briefly, by way of introduction, the way it was, the disruption, and what we need to do, we central bankers, to stay ahead of the curve and be in the game. So the way it was and the way it is, in a way, is what you just alluded to, Francois. It's this combination of public and private money, public money being the matter for central banks, either cash for individuals or central bank deposits for banks, and private money, where commercial banks were the main player, making up around 85% of M1, and being innovative with new forms of payment, from giro payments to cards to any other things. And both of those, public and private money, actually complemented each other quite nicely. Then came the disruptors, and I could not agree more with Ravi about the distinction that we have to make when we analyze the way forward and the regulatory framework, where we have to distinguish between the crypto assets, the traditional Bitcoins, Ether of this world, and the stable coins. And where I totally agree with Ravi that the crypto assets, not currencies, but the crypto assets are obviously pure speculative assets. And I think that the movement that we have seen in the last 12 months is clear indication of the fact that it is indeed a speculative assets, and certainly not a means of payment, not a very stable store of value. That's one aspect.
For now.
The second aspect, which is more promising, and I also agree with Ravi on that, is the whole sector of the stable coins, which only represent about 10% of the entire crypto universe. So it's very minimal for the moment, but it is promising as long as we don't have players that abuse the system, that pretend that they have liquid assets to back their stable coins, or that it's one for one when in fact it is not one for one, and Terra is followed by Luna bankruptcy. So that is possibly disruptive, but it is, for the moment, as I said, only 10% of this crypto universe that we are talking about. But it has created, and it has probably accelerated, the desire for more innovative ways of paying, more innovative ways of transacting. And as a result, digital payments are clearly in high demand. And this is more so in some countries, less so in others. Just to give you an example from Europe, in Sweden, for instance, there is virtually no cash transactions anymore because cash is not there. Whereas currently in Austria, there is a referendum to defeat a proposed regulation to request that payments be not in cash above 10,000 euros. Well, in Austria, they would like to be able to continue to pay more than 10,000 payments in cash. So there is great heterogeneity in the request, but we can see in the surveys that we have conducted that there is clearly an aspiration, a desire for digital payments, much more so than it was in the past, and this is growing. We are now, in the surveys that we've conducted across the 19 members of the Euro area, we have more than 50% of the respondents who say, we want digital payments. Well, less use of cash, demand for secure and riskless payments. Where do we stand? We central bankers, we have been operating as a monetary anchor in relation to the commercial banks and the private money. If we are not in that game, if we are not involved in experimenting, in innovating in terms of digital central bank money, we risk losing the role of anchor that we have played for many, many decades. And we have historical examples of period where the central bank monetary anchor was not there, and that precipitated crisis after crisis. That certainly was the case at the time of the free banking in the 19th century. Do we want to go back to those days? Probably not. I would say certainly not from our vantage point, as a result of which we have to respond to the demand for those digital payments in order to maintain the role of anchor that we have been playing regularly. So what have we done here in Europe and with the whole Euro system, including all the central banks that are members, including notably the Banque de France, which has been...
They've got 5,780 people watching. We've got 8,730 people watching. What does that tell you? What a community, guys. Well, if you're here, just smash the like button. She's talking a lot of garbage. But in the meantime, just smash the like button, let people know we're here. Let's get the number up.
The preferences, the media that could be used, and the characteristics that should be presented by the digital euro, as we call it. We're not the only one. Back when I started as president of the ECB, there were about 30 central banks that were looking at it. As we speak now, and I have nothing to do.
When you smash the like, just watch the viewers go up. So there's 8,761 now. If you all smash the like button, watch how quickly new viewers join us.
Central banks that are currently looking at CBDCs and exploring what characteristics it should have. So for us, it's the digital euro project. We will decide in about a year's time whether we actually move into additional phase and prepare the post-prototype phase. We are now currently in the prototype phase, and we're certainly not ahead of the game because PBOC in China is ahead of us and a few others. But we are not doing badly in terms of timetable, and we are sticking to it. What I would like to do, François, is just very briefly go through the characteristics that we see as important. First of all, it has to be a convenient medium of exchange, that it becomes part of everyday's life for the Europeans. Number two, and why is that? Because customers, Europeans who have been surveyed, have indicated that they want to be able to pay anywhere and expect instant, easy, and contactless payment, especially person-to-person payments. Second, it has to be a success. It is not a venture that you can go lukewarm. You have to be 100% sure that it will actually work. You cannot fail on that one. There are pitfalls, obviously, and if a digital euro is overused, for instance, as a form of investment, it could crowd out commercial bank deposits and affect credit intermediation in the economy. So while we talk about DeFi, which is disintermediation essentially, and finance determined by protocol, the way we are thinking about it includes actually intermediaries and makes sure that commercial banks are part of the system. We also believe that there should be well-designed safeguards that either would include limitations to the holdings or would include a sophisticated tiering system in terms of remuneration in order to prevent that the digital euro become a very attractive investment more than a mean of payment. We want appropriate pricing and distribution via payment service providers, because as I said, it's not something that would be done in abstract or without the intermediation of the commercial banks or other private parties, actually. But certainly the pricing should be right. And all of that is intended for the retail segment of the digital euro, which doesn't mean to say that it would exclude, quite to the contrary, actually, a wholesale settlement infrastructures that is often referred to as the wholesale CBDCs. Actually, that in a way exists already, although in maybe a preliminary and not sophisticated enough form. But certainly the wholesale CBDC must be explored, must be part and parcel of the overall system. And I know this is something that, François, you feel strongly about, as I do. And the settlement infrastructure on which we operate, which has a dimension of digital about it, needs to be significantly upgraded and needs to be made more digital than it is at the moment. And in that respect, if the counterparties, if the commercial banks with which we operate expect distributed ledger technology to be part of the improved infrastructure payment, then we should certainly be open to it and be prepared to endorse the digital ledger technology as part of this improved infrastructure mechanism. So well advanced on our way and moving into, as I said, prototype phase that would precede the decision by the Governing Council to effectively move ahead with the project. Thank you, Francois.
They're talking about CBDC. They're not talking about.
With us
there's an
in such
agenda
an
here.
open and clear way, your thoughts and questions on CBDC, including how to work with intermediaries. I'm sure it's of great interest for the participants in the conference. Jay, can I now turn to you? And you insisted rightly on the importance of regulation. I know that the Fed's research and reflection on stable coins, for instance, is of utmost interest. Jay, I only add that I cannot resist the temptation to invite you at the end, if you are ready, to say some words about CBDC also seen from the other side of the Atlantic, but up to you.
Thank you, Francois. And you've also given me a perfect opportunity to point out that we have a long and proud history, actually, on working alongside the private sector in support of responsible innovation that encourages efficiency, lowers costs, and brings better products to the public. We do favor responsible innovation, including in crypto-related services or products. I think back to the times when checks kind of became obsolete in a lot of ways, and we were very much in the middle of fostering that transition. The Fed is also roughly a year away from rolling out FedNow, which is an instant payment system that will make instant real-time payments available to the public through their banks. So the whole point of regulation, of course, is to create a level playing field that will allow us to reap the benefits of true innovation while avoiding the pitfalls of regulatory evasion. So turning to regulation, I guess I'll make a couple of higher level points about the regulatory challenge that we all face, and then talk a little bit more about stablecoins, which I agree are to be thought of as quite different from unbacked crypto assets. So I guess the fundamental principle for all of us, I guess, is same risk, same regulation. Some of these crypto activities resemble traditional financial activities. And they need that. They need same risk, same regulation wherever they take place. There are also some novel activities, though, genuinely novel, that are really a paradigm shift. For example, replacing intermediaries with smart contracts or decentralized governance and control structures. And so these novel structures create potential new risks. And I think we have a lot of work to do on that. We've got a lot of work to do across both the more traditional looking parts of DeFi, but especially for the novel aspects of it. An example would be unhosted wallets, for example, which allow users to custody their own crypto assets. However, they can also be used to evade sanctions or engage in money laundering. And there are other novel aspects of it that are quite challenging. Not least, as I guess two of my colleagues have pointed out, the fact that this is a borderless world, and just we look to regulate an entity, and as I think Ravi pointed out, if that entity is an algorithm, how do we do that? So there's a lot of work and a lot of thinking to do to determine what practices are acceptable, which ones are flawed and predatory, what can be done to address these problems. This is new technology. It certainly has the possibility to bring improvements and efficiencies to the financial system. We've got to realize, though, that in some cases these apparent efficiencies are really superficial in the sense that the cost saving comes from ignoring risks or failing to maintain appropriate levels of assets and liquidity to deal with those risks in good time and bad, and from complying with laws. So those are some higher level points. On stablecoins in particular, so as I think others have pointed out, most of the usage of stablecoins now is on the crypto platforms. In effect, stablecoins are a money-like asset that is used to settle transactions on DeFi platforms. But many stablecoin issuers are talking about it, and there's a great deal of interest, I think, everywhere among potential stablecoin issuers to reach the general public more broadly, including retail payments and that sort of thing. And I think, so that's really what our main focus here from a regulatory standpoint is should stablecoins be used in that way, much more broadly, much more public facing, away from the crypto platforms, what's the appropriate regulatory structure? And we have a group of U.S. regulatory agencies under the leadership of the Treasury Department put together a proposal that, or an analysis and a proposal, and we encouraged Congress to pass legislation, which we think is needed for this kind of stablecoins. I'm happy to say that the House Financial Services Committee here in the United States is working on a bipartisan bill. And that's a very constructive enterprise. I will say that from the standpoint of the Fed, the central bank, we think that the central bank is and will always be the main source of trust behind money. Stablecoins essentially borrow that trust from the underlying issuer, and in many cases, these are dollar stablecoins, so they're really borrowing that trust. These are private forms of money. They will be subject to runs if the assets, if their reserves are not full of very high quality assets. So there's a regulatory job to be done there. We also think if you're going to have private money created across the country, really there needs to be a federal role. I would liken it to what happens with the dual banking system here, where there's a very important role for state regulators, but there's also a role for any commercial bank in the United States. There's also a role in licensing that bank to operate at the Fed or another federal agency. And in the case of this, which is money creation, we think it really should be the Fed that does play that role.
Slack pump.
So that's our principal focus now, I would say. Turning to your question, so cash is not disappearing here in the United States. We still use cash quite a lot. It is declining, not in absolute terms, but compared to non-cash payments, it's declining. And we're motivated by really what Christine was saying, to look very carefully at the potential costs and benefits of issuing a central bank digital currency here in the United States. So we agree that the central bank has always provided the stable, trusted anchor for the currency. That's really perhaps our most fundamental role as central banks, one of the most fundamental roles anyway. So we're looking at it very carefully. We're evaluating both the policy issues and the technology issues, and we're doing that with a very broad scope. We have not decided to proceed, and we don't see ourselves as making that decision for some time. We see ourselves as working in collaboration with both Congress, of course, but also with the executive branch, which brings expertise to many of the issues that we have to deal with here. And at the end of the day, we will need approval from both the executive branch and Congress to move ahead with a central bank digital currency. So we see this as a process of at least a couple of years where we're doing work and building public confidence in our analysis and in our ultimate conclusions, which, as I say, we certainly haven't reached yet. I guess I would just say that's where we are. We've got a lot of work to do. There are many more things to say, Francois, but I'll stop there.
I think we should also stop there. I think we pretty much heard everything that there is to say. No big news coming out of this. But I mean, there is some news, specifically that they're working on CBDCs, specifically in Europe, making good headway. And, we don't want CBDCs because CBDCs will control where you spend, how much you spend. And I always give the example that, if they impose lockdowns again and they could then limit your wallet to not be able to spend at a certain time. So let's say that there's a lockdown that's imposed that no one is allowed to leave home at 10 p.m. or past 10 p.m. If you leave your home past 10 p.m., your wallet won't be able to work. And if you want to go and buy diapers, well, tough luck. You can't buy it. That's just the way it is. So we're going to be very much against. I see Powell's back on.
This is a world in which stable coins are being offered more to the general public. So they have aspects of bank deposits. You could say they have aspects of money market funds. And of course, both of those are very substantially regulated, and appropriately so, because the general public will look at, I think we know from our experience over time, they'll look at a form of private money like that, and they'll assume that it's money, that it's money good, that it has the central bank's backing, or something like that, so that they can trust it. And we just need to make sure that if the public is going to be facing and dealing with stable coins that carry that implication, the reality is there. And I guess Ravi mentioned the reserves. The reserves need to be transparent, publicly, transparent to the public, and they need to consist of the kind of, credit assets that will always be there when there's a need to fund withdrawals, because otherwise the structure will be run-proof. And we saw that in the last few months in a couple of cases where stablecoins were not able to handle withdrawals, and we saw it regularly with money market funds in the last two financial crises. In both of those cases, some of the money market funds were not able to, or really struggled to keep up, and the Fed had to step in and provide liquidity to that part of the market. So again, that's another form of private money, and we think it needs appropriate regulation.
All right, so that's Powell. Guys, first of all, thank you. It's been amazing hosting all of you, 9,500 people, which is, more people than they had by a long shot, by a long way. Before we go, so a couple of things. Number one, more people than trading competition launches tomorrow on BitGet and ByBit. Number two, if you haven't already traded futures on ByBit, go and deposit $1,000 into ByBit, and you could get a $1,000 ETH position in ByBit. All you need to do is just click here, and that's what happens. Also, tomorrow I'll be 10xing some BitGet portfolios. So what I need to do is if you're in the States or wherever you are, just go and hit that link over there, and you'll get yourself a BitGet account, deposit money into the BitGet account, and tomorrow I'll be 10xing a couple of BitGet portfolios. Lastly, go and have a look at our Discord. So everything, all the big calls are in the Discord. Oh man, James, it says the Discord invite is expired. Let's try and get the right one. Hold on, let's try and get the right. There we go. Okay, I don't know why it says I don't have permission to join, but there's 20,000 people on the Discord. So go and have a look at the Discord. All our calls are there live, and you can also, everyone says it's the best Discord ever, and it is the best Discord ever. Go and go and check it out. Also, if you do have an exchange account using our referral link, that means you get access to the VIP zones. Guys, I will see you guys again maybe tomorrow. If not tomorrow, the next day. Tomorrow I'm at Token 2049. I've got a couple of big interviews lined up. If I'm not here tomorrow, I will be back. I'll be back here on Thursday. So I'll see you guys again then. Until then, trade well, my friends. Have fun.